Hello and welcome back to video 2 of the Forex Mythbuster series. I'm here to dispel some of the myths that have grown up around Forex trading. I'm Jeff Fitzpatrick and I'm editor of Forex Trader magazine, the magazine written by home traders for home traders. We're looking at the myths that have grown up around Forex trading, and in video 1 we looked at the question of whether Forex trading is very risky, and I think we gave a definitive answer that no, it's not. And in a future video we'll look at how Forex trading needn't steal your time and needn't be expensive to undertake. I have to give this legal disclaimer, and it's to say that this is not investment advice in any way, shape or form, and I'm not responsible for any losses that you incur through the misuse of this material. And similarly, you must take personal responsibility for any trading decision that you take. It's down to you in the end. What I can do is to help you to understand what the risks are and to minimize them. So, with no further ado, let's get underway. First, we'll have a brief recap on what I said in video number 1, in which we busted the myth that Forex trading has to be high risk. And we said we could reduce that risk in a number of ways. First, and very, very importantly, we said that hedging could be used rather than using stop losses, and that this was simple and easy to do. We also said that a demo account is extremely important for learning and growing your skills, for gaining experience, and for testing your ideas. Thirdly, we said keep trades very small in proportion to the amount of money that you put into your account. Fourthly, we noted that training and ongoing development are extremely important, even to the extent that I would prefer you to have training from somebody else rather than no training whatsoever, although I do think the safest training is with Forex Trader magazine. And finally, we looked at research and a number of tools that have been developed using extensive research into the behaviour of the market, and how knowledge such as that can help us to trade better and more profitably and more safely. The Forex Trader magazine live trading experiment has run since January 2014, and in that time it hasn't had a single loss. This leads me to conclude that I don't think that Forex trading is particularly difficult. At the time of this recording, the experiment had been running for 35 weeks. It had made a 96% profit and had no losses. You can actually catch up and look at this yourself and see how it's performing at any time. Just go to the website of forextradermagazine.co.uk. There you'll find a tab which is FTM-blog, and on there you'll get the latest entries. We update it every week. In this video I'm going to blast the myth that trading Forex has to be difficult. After all, we've all seen footage from the cinema and from the newsreels of traders in their hothouse environment and earning their fortunes. Surely to do that they have to be super intelligent. You would think so. However, I think not. In fact, it's one of my pet things in life that I think just about any normal everyday person like you or I could actually do that job with very little training. But we're probably not going to get the chance to do that, so we'll concentrate on making money ourselves, trading for ourselves. And let's have a look at then, how difficult is this Forex trading? If you can just answer 4 questions, you're 90% plus of the way there. Firstly, is it a buy situation, a sell situation, or a hold situation? Maybe it's a question of whether you're going to buy or you're going to sell. That's the first question. And if you are deciding that yes, I'm going to buy or I'm going to sell, then you need to know when to enter a trade and also when to exit that trade, and also you need to know how much money to put into the trade. If you can answer those 4 questions, you're well on the way. And I'm going to show you that answering those questions is not particularly difficult. But wait, there is also another question. But this for me is a one-off question, and that is which currencies to trade. Currencies are always traded as a pair, so you use one currency to buy or sell another currency against. So it's always a pair. In my case, I use exclusively the pound and the dollar. For a number of reasons. First of all, I know these two economies, I know the two currencies pretty well, but also there's enough action going on There's enough trading of these currencies that there's good volatility, there's good movement, there's good levels of trading, and they create a better trading environment. But for me, that's a one-off decision. That's already made. So we can actually move on and look at some of the other decisions that need to be made in a trade. And like every form of trading, Forex trading is basically a matter of deciding when to buy or when to sell, or to do nothing. And these are the only three choices that you have. Well, what if I could show you a simple decision-making tool that's never failed, and I've checked it going back for as many years as I could possibly find data for. This is where I've got my huge spreadsheet. Well, I have such a tool, and it acts like a traffic light. It shows me a colour for green, it shows me a red area for sell, and it answers the question of what to do when we're on amber too. For me, amber is an area where I can happily buy or sell, and either will make me money. So amber is in fact a favourite colour of mine on the traffic light system. The decision to buy or sell is really made easy, and it's 75% of the job done. If you're buying at the bottom or if you're selling at the top, you're more than halfway there, a lot more than halfway there. And already we know if we're going to trade, it's going to be a buy or a sell, simply from looking at the traffic light. Next, we need to know what the short-term trend is. And we use the short-term trend to make the decision as to when to enter or to leave a particular trade. So shall we trade? Well, look at this little diagram first. This is a picture of part of a candlestick chart or a graph. Each of the vertical blocks on this chart show a single day of price activity on the pound dollar. The red ones are where the price has opened at one level and moved down to a low level and closed at the end of the day. The green ones are where the price has opened at one level and closed higher during that day. The length of the candlestick or the block varies. You can see some short ones here and a longer one here, short one here. And that means that on those particular days there's been greater or lesser movement on those prices. Here is a diagram that actually explains a little bit more about these candlestick charts. So we can see on the red block we've got to open at one price, we've closed at another price, but also during the course of the day, i.e. after it opened, the price has been higher than the opening at some point in this diagram, and also it's been lower than the point that was finally the closing point for the day here. So it's pretty similar for a day that involved upward movement in the price. So we have an opening price, a high closing price, and we've got the extent on these wicks of the highest price of the day and also the lowest price of the day. We can go into that a lot more in the future if you're not already familiar with it. We can see on the diagram that the price is currently very close, if not within, the green zone. And that's my green traffic light area. And that's telling me, therefore, that if I do decide to make a trade today, it would be probably a buy trade. And moving on to the next slide, I've indicated where the price for the day is actually opened. So that's the green line here, and it relates only to this last candlestick or red block here. And that means that it's the opening price for this day, not for any of the previous days, just for this day. And the price has opened here and it's fallen. And it's fallen to this purple line. There are in fact two purple lines, the one that we've moved through and beyond here, and an upper one. And I use these as guidelines. So these tell me that the price is actually moving significantly during the day. You can see that on the previous day there was much less movement. That's a day that I wouldn't have traded on. I want to be able to trade when we've got a significant amount of movement in one direction or the other. So today is moving in that direction because since the price opened we've had a good fall. It's actually gone beyond my trigger point for recognizing decent movement, which is that purple lower line in this case. So I know that we may well be setting up to get involved with a buy trade, and that we are doing that, one, because of the movement in the price, and two, because we're in the green area. There are other lines that you can see too, notably these red ones. and the first red one's moving away from the green opening line and beyond the purple trigger line, so that's this one here and this one here, are at 75 pips away from the opening point. Don't worry about that, it's a bit of a technical term. But the point is that on 70% of days, the price will only move as far and no further than these red lines. Therefore, if they're touched, there is an extremely good chance, there's a 70% chance in fact, that the price will stop moving in the direction of those lines and reverse. That's a good point to make a trade. If the price continues to move, in this case if it continues to fall to the next red line, we know that we're now in with a 90% chance that the price will go no further and it will turn round. Again, an even stronger trade decision can be made there. So, what about when to take profit? Well, we actually use those same lines. If the price rises, we'll take a profit. If it falls, we'll protect the trade. So that's after we've entered a buy trade. If the price goes up, we're able to take a profit. If the price falls after we've entered the trade, we'll be able to protect that trade in the strong knowledge that it will be profitable before very long at all. And that's really as much as we need to know. We can actually now be in a situation, we know we're going to make a buy or a sell trade, or we're going to be safe to do either, and we're just simply watching to see where the price goes to in terms of hitting these various lines. Another question that we need to answer though is how much to trade. So in effect we're going to gamble here. We're going to place a bet on which way the price is moving. In exactly the same way as when someone buys a share, they're taking a chance on the price of that share rising. We can do it in both directions though. We can get hold of some of this currency combination and make money whether it goes up or down. And we will show you how to minimize the risk by placing trades that are absolutely tiny, just 0.0006% of the value of a trading account. That's about 10 cents or 10 pence, whichever you're on, in the £100 or the $100 of your capital. To recap, we have a color-coded tool that tells us whether to buy or sell. We have lines that tell us when to enter and exit the trade. And we have a very good strong rule of thumb that tells us how much to trade. So what's next? Well, that's it. With those three simple things, we've covered trading. And I've shown, I hope, that it can actually be very, very simple. There are no more decisions to make. Do you buy, do you sell, when to enter, when to leave, and how much value to put into the trade. That's the end of that. So, we showed in the first video that there's no great deal of risk involved. It doesn't have to be. And also we've now shown that trading itself can be very easy. In the next video I'm going to show you how to trade with just a couple of minutes each week. Yes, each week. And just how little capital you would need to use to trade in exactly the same way as I've been showing you trading myself here. So in the next video that's what we'll look at. Thanks again for listening.